Picture this, a three-ring circus of money and you're in the front row. In the first ring, the New York Stock Exchange. Chaos, energy, fortunes made and lost in seconds. This is the world of stocks, the engine of American capitalism. Companies like Apple and Ford raise money here, fueling innovation and growth. It's loud, fast, and always moving. Now, the second ring, silence. A vault lined with gold bars, gleaming in the dim light. Gold isn't about quick profits. It's about history, stability, and being a safe haven when the world feels shaky. For 5,000 years, gold has been the ultimate security blanket. When fear takes over, people run to gold. Third ring, the digital glow of 1,000 screens, crypto. No trading floor, no vault, just Bitcoin, Ethereum, and a wild, decentralized world. Crypto is the digital Wild West, volatile, exciting, and confusing. Some call it the future of money, others call it digital air. It's a world of massive gains and terrifying crashes. Welcome to the battle for your money. Three contenders, gold, stocks, and crypto. Each wants your investment dollars. Gold, the old-school champion. Stocks, the long-term workhorse. Crypto, the electrifying newcomer. But they're all fighting a common enemy, inflation. Inflation eats away at your savings, paycheck, and future. The fight is on. You need to pick your winner, or do you? Let's break it down. The stakes, your financial future. The challenge, outrun inflation. Let's get started. Inflation, what is it really? It's when your money buys less than it did yesterday. That coffee that used to cost $1, now it's $2. Gas, groceries, rent, everything's up. Inflation is a silent thief, stealing your purchasing power day by day. You work just as hard, but your money doesn't go as far. For families, it's not just numbers. It's real stress at the checkout, tough choices at home. Saving cash in the bank? If inflation is 5%, your $10,000 loses $500 in buying power in a year. The bank's tiny interest won't save you. Leaving money in cash during high inflation is like parking your car in a hailstorm. You're guaranteed to take damage. You can't just sit back and let inflation eat your lunch. You need assets that grow faster than prices rise. This isn't about getting rich quick, it's about survival. Protect your hard work. Make your money work for you. When things get scary, people turn to gold, the oldest financial asset in history. Gold is real, rare, and can't be printed by governments. It's the ultimate safe haven. When economies crash or currencies fail, gold shines. In the 1970s, as inflation soared, gold's price skyrocketed. It protected wealth while cash lost value. After the 2008 crisis, gold hit record highs as investors sought safety. Gold is financial insurance. You hope you never need it, but you're glad it's there. But gold has downsides. It just sits there. No dividends, no rent, no growth. It costs money to store and insure, and taxes on profits can be steep. During normal times, gold can stagnate for decades while stocks create millionaires. Gold is a great defender, but a terrible attacker. It protects wealth, but rarely builds it. Think of gold as a shield, not a sword. It's there for the crisis, not for the long haul. If you want to grow your wealth, you'll need more than just gold. It's a piece of the puzzle, not the whole picture. Use it wisely, but don't expect miracles. Gold is timeless, but not always rewarding. Enter crypto, the digital disruptor. Bitcoin and Ethereum are the poster children, with a fixed supply and no central control. Fans call Bitcoin digital gold, a hedge against governments printing money. In places with hyperinflation, crypto is a lifeline, not a gamble. But crypto is the Wild West. Fortunes made, fortunes lost. Bitcoin can drop 20% in a day or lose half its value in months. The emotional roller coaster is real. Hacks, scams, and lack of regulation add to the risk. If your crypto is stolen, it's gone. No safety net. Governments are circling, and new rules could change everything overnight. Crypto is a high-stakes bet on new technology. The rewards can be huge, but the risks are off the charts. It's a rocket ship, moon or bust. If you can't handle the ride, steer clear. Crypto is not for the faint of heart. If gold is the shield and crypto is the rocket, stocks are the engine. Buying stocks means owning a piece of real businesses. Coca-Cola, Microsoft, Home Depot. When inflation hits, strong companies adapt by raising prices, protecting profits, and your investment. Over time, stocks have outpaced inflation, delivering real returns of about 7% per year. This is the power of compounding. Your money grows as businesses grow. Dividends are the secret weapon: cash in your pocket or reinvested to buy more shares. The snowball effect builds wealth while you sleep. Stocks aren't risk-free. Markets crash, bear markets happen. But history shows the market always recovers and reaches new highs. Investing in a broad index fund is a bet on American business, and it's paid off for generations. Stocks are the primary engine for building wealth. They're not flashy, but they work. Stay in for the long haul and let compounding do its magic. The key? Patience and discipline. Stocks are the backbone of a winning portfolio. Let's look at the numbers. Imagine you invested $10,000 each in gold, stocks, and Bitcoin at the end of 2013. Fast forward to mid-2025. Gold, $10,000 bought about 8.3 ounces at $1.200 per ounce. Now at $2.300 per ounce, it's worth around $19,090. You nearly doubled your money. Gold did its job. Stocks, $10,000 in the S&P 500 grew to about $40,000, including dividends. That's a 4x return. Stocks crushed inflation and built real wealth. Bitcoin, $10,000 bought 13.3 coins at $750 each. Today at $65,000 per coin, that's $864,500. Life-changing, but with wild volatility. The lesson: each asset played its role. Gold defended, stocks grew, crypto exploded. But the ride was very different for each. Gold was steady, stocks were resilient, crypto was a roller coaster. The numbers don't lie. Diversification matters. No single asset wins every round. The best results come from blending them. Risk, reward, and resilience. Each has a place. The past decade proves it. Don't bet everything on one horse. Build a team. That's how you win. What are the pros doing? Warren Buffett sticks to stocks, productive businesses that grow and pay dividends. He's skeptical of gold and crypto, betting on American business. But even big institutions are changing. BlackRock, the world's largest asset manager, launched a Bitcoin ETF, making crypto accessible to the masses. Everyday Americans, some stick to index funds, building wealth slowly and steadily. Others, especially younger investors, are drawn to crypto's high-risk, high-reward potential. There's a split. The old guard trusts stocks. The new guard takes big swings on crypto. The smartest investors, they're blending strategies. They diversify. Some stocks, some gold, a little crypto. The lesson: don't put all your eggs in one basket. The future belongs to the balanced. So, who wins the battle against inflation? The answer: you don't have to pick just one. The smartest move is diversification. Build a team, not a solo act. Stocks are your offense, the main engine for growth. Gold is your defense, insurance for tough times. Crypto is your wild card, high risk, high reward, but only a small slice. A balanced portfolio is like a championship team. Attackers, defenders, and a wild card. Most of your money should be in stocks, a small slice in gold, and an even smaller slice in crypto. This mix gives you growth, protection, and a shot at big upside. If one falters, the others can pick up the slack. Diversification is your best defense and your best offense. Don't go all in on one bet. Build a resilient portfolio. That's how you win the long game. One last story. Ronald Reed, a Vermont janitor, quietly amassed nearly $8 million. No lottery, no inheritance, no crypto jackpot. He lived simply, saved, and invested in solid American stocks. He bought companies he understood, reinvested dividends, and never panicked. He let compounding work over decades. Ronald's story proves wealth isn't about genius or luck. It's about habits, discipline, patience, and faith in long-term growth. The real key? Not timing the market, but time in the market. He weathered storms, ignored the noise, and kept investing. You don't need a high income, just the right mindset. Remember Ronald Reed as you build your portfolio? The tools are here. Stocks, gold, crypto. Start saving, start investing, and be patient. The path to financial security is a marathon, not a sprint. Build your own American dream, one step at a time. Booyah!